A call is pretty much a contract. That contract gives you the right to buy 100 shares of a certain stock at a determined price. That determined price is your strike price. So let's say I got a 300 call. That means I could buy three. I could buy 100 shares of Apple at $300. That's what the 300 call means. And then a put is pretty much the opposite. It means I have the right to sell 100 shares at a determined strike price. Same example, 300 put, I could sell 100 shares of Apple at $300. That's important because that pretty much will determine what your contract is valued at. If you have a call at $300, but the stock is trading at 295, your option's pretty much worthless because nobody's. Why would you buy it at 300 when the stock is trading lower? And then same thing goes for the put. Why would anybody sell it lower than what the stock is actually trading? So those are just in basic terms. That's what you're buying. You're buying contracts. Now, where do these contracts get their value? There's a lot that goes into it. You could learn how to decipher these Greeks that are your delta, it's your gamma. That pretty much I don't really get it too much into that, but that pretty much tells you for every dollar that the stock goes up, this is how much your contract will go up, and if you want to get into that, you could pretty much figure that out. But you don't really need that. What's more important for me is the theta. Theta is pretty much your time. So I learned that in the stock market, when you usually follow a stock and you think that it's going to go this way, it's going to go that way. Usually, you might be right. You don't necessarily you might be right that it's going to hit this a certain price, but what you're wrong about is the time frame that it's going to take for it to do it. So when you buy contracts, each contract has an expiration. So you have weeklies, you got monthlies, you got 2 weeks out, you got 6 months out. And then obviously the farther out, the more time you get, the more expensive they are. But the downfall of getting these cheap weeklies is that if it doesn't go your way in a week, you pretty much just lost your money. Whereas me, if I have a month for my prediction to become true, I have more of a chance of that becoming true. So remember, the stock market's it's not really stagnant. It's not linear either. It goes up, it goes down, it goes up, it goes down. So there's a chance that what you have might come true within a larger amount of time, 2 months, 3 months. So I prefer to get time over anything. Um, that's just a small little tip. Uh, Now, another thing too is that you'll notice that you'll benefit from large swings in the you pretty much you benefit from volatility. So somewhere in the world there's stockholders. That's not us because we're not the big money guys. But somewhere in the world there's stockholders, and there's somebody who owns 1,000 shares. There's somebody who owns 10,000 shares, and these guys are pretty much constantly getting calls from their brokers, and their brokers are telling them, there's a good chance that S&P will go down to $3,000, or that Apple's going to go down to $300. Would you feel comfortable buying an insurance policy on that? That way, if Apple decides to plunge below 300, this is what you're saving. This is what you're not going to lose. That person has the right to buy it or not. Or if he doesn't like that offer, you can buy an insurance policy at 290. You can buy an insurance policy at 280, and then that's pretty much what we're trading. We're trading those insurance policies. That's the contracts. So when you redeem that contract, that's pretty much where that money's coming from. So you can figure out more or less without getting into the deltas and without getting into the thetas what that contract would be worth just by figuring, okay, if whoever buys this is gonna save $20 per share, and that's 100 shares. We're talking about $2,000. That's more or less how I figure out whether this contract will be worth it for me to buy or not. Uh, Simpler, pretty simple there. Uh, so I tend to pretty much follow the trading fraternity, and not same thing, just like he says, it's not a financial advisor. I wouldn't 100% go with just what he says, because you could lose your ass and it's not his fault. I have made money doing this, but at the same time, I've lost money doing this. So it's not just win, 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 win. This is kind of like gambling, right? You could make educated predictions on what's going to happen, and you could do your research before you get into it. But at the end of the day, it's gambling. I came up pretty big a few months ago when this whole Corona stuff happened, because I started buying SPY puts. That was great. That was a good hunch, but I immediately pulled out and I just watched it go back up. I at no moment went back in because I wasn't sure what was going to happen. But just like me, if you would have asked any investor, is this shit going to go right back to where it was, 45 days later? I don't think anybody would have believed that was going to happen. So the stock market tends to do shit like that, which is what makes it exciting. But at the same time, it's fun when you're winning and it fucking sucks when you're losing. So my only, I guess, learning experience, because like I said, I have made ridiculous amount, like 20, $30,000 on calls, but then I've gone down 15, $20,000 just as fast. So it's not.
That's how it works.
Listen, that's how it works. You all of a sudden you make this crazy amount of money, and you think that it's going to happen again. You get crazy, you start buying these crazy amount of calls. I at one time probably had in my portfolio, I probably had like 20, 30 different companies that I had calls and puts on, and it just
Oh
became,
my!
it was just too much. It was just too
But you
much. I was
must
like,
have been.
I was going crazy. I was going crazy trying to follow them all. So the only thing that I would say is this is you gotta learn to control your budget, and you gotta learn, how much you could afford to pretty much lose. So the reason why I say that is because if you figure that you can have, high probabilities when you're buying these options, there's something that you look at called a standard deviation. So you go, one standard deviation out. When we say on the money, that's pretty much that the stock is trading at the price, at the stock is trading at what your strike price is, pretty much. That would mean that your contract is in the money. If your contract becomes in the money, you all of a sudden have this nice value to it, intrinsic value that gets added. Something that's really hard to calculate, but it'll make your contract profitable pretty much. So if you stay within a certain standard deviation from in the money, from out the money, so you buy contracts that are 1 to 1.5 standard deviations out, you have something like a 70% chance of that contract hitting. So what I'm trying to get at is that if you if you learn if you learn that you could get, I mean, you can make, at the beginning when I started off, I was making like 30%, 50%, and I was getting happy, and I was selling it. But that's not enough. You got Once I realized that options can hit 400%, 500%, 1,000%, that's when I started to understand how much money you can make from this. So I mean,
It's
imagine
holding on.
you invest $100, you make $1,000. That's pretty fucking sweet. Like that
Yeah.
doesn't happen every day, and it's hard for it to happen, but that's nice. That's like fucking bowling a strike right there. So if you do, let's say, if you buy 10 contracts and you spend $100 on each one, all you really need is 1 out of 10 to hit a 1,000 percenter, and you make your money back. So the only reason why I'm saying that is because as long as you have a budget and you continue to have money in your account, doesn't matter if you're still playing, and there's still a chance you're going to get your money back. Once you blow through your account and you have no cash in your account, you can no longer play. You no longer have a chance to win your money back. So, like I said, this is just like gambling. This is kind of like Vegas. Um, so that's one. Always, I make it a habit of, for example, like every time I get paid, I'll throw in like 200, $300 into my account. 200, 300. Not necessarily trading it, but just pretty much building my account for when I see companies pop, for when I see things drop. that's my opportunity to get in. Now, one thing that I learned the hard way is that everybody gets FOMO when it comes to trading options. So let's say you see that you're watching, you're following a stock, and let's say you see this stock ripping up, like for example, Tesla did a few weeks back. Tesla went up, $100. It went up $200. It went up $300. It went up $400. Eventually, somebody's looking at this and they start thinking, okay, I could buy a call because Tesla keeps going up. But that's where the FOMO comes in, and that's where I would say that you want to do the exact opposite. When you see a company going up a ridiculous amount that it doesn't normally go up, 10% in a day, 5% in a day, you're probably better off buying a put when that happens, betting that the company's going to go down, than continuing to bet that it's going to go up. After every new high comes a new low. So you pretty much want to do the opposite of what the company is doing. If you see it drop a crazy amount, you probably want to buy a call because it's probably going to come back up after that. There's no such thing as a company that's going to drop and hit and bottom out at zero. There's no such thing as a company that's going to continue to hit new highs and never go down. Um, that's also important because I've gotten ripped like this. So that's what I'm saying. I learned this from experience. But when a company's on the up like that, companies, going up 5%, 10%, everybody wants the calls. So when you buy these calls, you're already buying them at an inflated price. What that means is that by tomorrow, your call can lose half of its money.
Exactly.
So not only is it important to see, how far away from the strike price you're getting it, but it's also as simple as the timing that you get it. What was the stock trading at when I got into this position? If I'm buying a put, I'm gonna say this stock is gonna go down, and I'm buying it when it hit its peak. Guess what? No matter what happens, that contract is gonna become profitable as long as the stock doesn't keep going up. Anything that it goes down, I'm already in a good position because I bought it at the peak. Same thing when with calls. If you buy it at the lowest point that the stock was trading at, you're already good. Your contract's gonna become profitable because it's not gonna go that low again. It's back on the up now.
That's good
So it's
time.
all about that's a good time, right? So you pretty much wanna sell. You wanna buy when it's low, and you wanna sell when it's high. That's pretty much what you want to do to always be in a good position.
When it comes to options, and in this particular sense, you're just talking about buying puts and calls.
Right, buying puts and calls. But like you also want to sell it at the right time too. So I want to sell a put, a put that I already own that's making money. I want to sell that put when the stock is dropping. You don't want to sell it when the stock is going up.
Right.
Same thing with the call. You want to sell the call when the stock is ripping. You don't want to sell it when it's going down. And those little things alone makes a difference between you making an extra few $100. You know. But the thing about what you make on this. So first of all, there's two ways that you can look at it. I guess as an investor, there's two ways you can look at this, and you could either make, I've done both. I've done both. It just depends on how much money's in my account and how I'm feeling. But you could either buy this contract with the understanding that that money's gone. That if you're okay with losing that money, you got to understand that this money is as good as gone. You won't be disappointed if it doesn't come true. But you also got to know when to pull out. So if my contract decides to shoot up 200 and 300%, am I going to wait for it to get to 1,000%? Or am I going to be happy with that 200, 300% and pull out? That depends on you. That depends on how much money you invested in that option. That depends on how much money is in your account. And 200, 300% is not bad. You don't want to beat yourself up if it could have been 600%. You don't want to do that to yourself. Just be happy with what you got. But keep in mind that 200, 300% profit can quickly can quickly turn into losing your money as well. So the way that I view these options, the way that I view these contracts, you're pretty much holding a fucking ticking time bomb in your hand. If you can get rid of it and you can make a decent profit, I think you should do it, because it is nice to see 1,000 percenters. It's fucking sweet, but it doesn't happen that easily. And if you try to hold on to them to see that 1,000%, there's a better chance that you might just lose everything that you gained. So learn to fucking take profits, learn to sell them the minute they make money, not 20, 30%, but if you're getting up there, if you're getting 100%, 200%, especially if you could pull that off in a day or two, get rid of them. Because like I said, they got, like, I'll give you an example, because sometimes I'll sell my contract, but then I'll continue to follow that contract just to see what would have been, not
Right, right.
not to tell myself, oh, you shouldn't have done it, but just to learn from that experience. So the Tesla contract that I had, I bought a few weeks back. I think that's the one that I sent you a picture of. I bought a 1400 put. Okay, I bought a 1400 put on Tesla when Tesla was trading at like 1600, 1700. Right, so Tesla had a massive rip. So I did not think Tesla was going to go any higher. It had to eventually come back some. So I bought a 1400 put, but Tesla was expensive. I only bought a weekly. I only had 5 days on that contract. I bought that contract for $700. Okay, Tesla decides to go down the next day. I can't remember exactly how much Tesla went down. I think Tesla went down to about 1,500, around $200. My contract was worth $3,700.
Oh
I
my
made 400% profit. That was a $3,000 profit, pretty much, on a $700 contract.
God.
Now, I sold it. I sold it as soon as I saw those numbers. I got super excited because it was close enough. Now, I could have waited because
Right.
I had 5 days. I could have waited to see if Tesla was going to hit 1,400. But the truth is, I mean, the reality is that it didn't. It flirted with it. It got close. It got down to like 1460, but it never hit 1,400. So
Right.
what happened on Tuesday? That contract, that 1,400 put contract, was already worth, 2,500. Had gone down $1,200. What happened Wednesday? That contract was at 2,000. What happened Thursday? That contract was at 1,000, 1,000 to 1,000 something, 1,100. And what happened Friday? That contract was worthless. So if I would have held that contract till the end, trying to get that 1,400, I would have lost all my money. I
Right.
wouldn't have made anything. I would have lost my 700. But
No, you pulled out when the
just
IV was at its highest right there, and
pretty
the
much,
time.
pretty much. So not so it's not. Sometimes it's not even about your prediction coming true. Like, yeah, 1,400 put sounded good. It was a good price. It didn't even have to hit $1,400. And look at the
Right.
kind of money that I made. It was just going off speculation. It was just a swing, and I just took advantage of the swing. But I by no means was right, and I by no means, knew what Tesla's price was going to be. I
Right.
just knew it was going to go down something. I knew what I could afford, and it just got really fucking close. But that was enough for me to pull out. It could have gone either way though. So what you wanna look at is things like that. You wanna have enough time, and then you wanna be something close to the range of where your stock might hit. But at the same time, what you're really waiting on, this just doesn't happen every day. What you're waiting on is a swing. You're waiting on something massive to happen to that stock, that it's either going to go up or it's going to go down, so that not only that contract, but every contract under that one, they're all gaining value. If it looks like the stock is starting to crash, all these puts all of a sudden are doubling, tripling in price for no reason. It can just bounce back up, and then you miss. If you weren't there at that moment, you missed it. So
Right.
that's what I'm saying. That's where you want to just own it and flip it. A great time to have these things. It's earning season. Earning season happens 4 times a year, and earning season is probably when you can expect to see the biggest swings, either up or down. So I'm a big fan of just playing earning season, holding puts. So you could do when earning season is approaching. There's two strategies that you use, but I've seen this firsthand, that let's say this company is reporting earnings today after the bell closes. bro, fucking an hour, 30 minutes before the market closes, all the contracts start shooting up a ridiculous amount of money.
Of course.
It's just implied volatility. But
Exactly.
if you don't take advantage of it, the next day, that implied volatility is cut in half. So are the profits. So is what your contract value was. So you pretty much lose it. So you could buy contracts a month before earnings and just flip them before the earnings
Exactly.
if you're scared to hold on to it, and you could make money doing that.
Of course.
Um, then you could, at the day after earnings, you could get back into it, and you could buy that same contract at a lower volatility. Now, that thing that Josh was talking about, the ghetto spreads, that pretty much is kind of what I'm trying to explain to you about buying buying calls when the stock is at its lowest point, and then buying puts when the stock is at its highest point. That, that's that's pretty much what he
He's
does.
on top of
It-
it, waiting for that moment, and then he
right,
acts on it at the moment instead of just like letting it play out in a certain way.
right, exactly. So so if you know a little bit about spreads, you depending on what you're doing, whether it's a credit spread or a debit spread, you're buying one contract, and then you're either selling the lower priced one to pretty much lower the money that you got to come in with, or you're buying a contract and then you're selling a higher priced one, depending on whether you want to make it a debit or a credit. And that's pretty much what he does. He just doesn't do it at the same time. So if you wait for the stock to drop, and you buy a call, you're buying that call at a really good price. Now when the stock goes up, you sell a call. Now you're selling a call pretty much at a higher price than what you bought it at. If you
Right.
would have done both transactions at the same time, yeah, all the calls are cheap. But he's buying the call cheap and he's selling the call when the call goes higher. That's
Right.
pretty much what he calls a ghetto spread. So you're getting more money for it. And the way, if you do that correctly, you could pretty much trade for free
Right.
if you can understand how to do it right. You pretty much will trade something for $0. You're pretty much playing with house money. So it just, if you learn how to. I tried that for a little bit, and like I said, I kind of lost some money doing it. But by trying that, that's kind of what made me understand how the calls and the puts are priced, and that's usually what's important. You got to learn to look at a call and a put, and for a certain stock, and sometimes you got to marry the stock, and you got to constantly be looking at the options chain to know this. But you got to know when they're trading high, when they're trading low, when that's a steal. It's that's how you make it. So I learned from watching this guy. I learned that he likes to buy, these fucking tiny, cheap ass 17 cent, 13 cent contracts. That's what he buys, and he flips them for $1. A dollar
If a
50.
contract is gonna at what, $1, he'll wait till it goes up $1 and then sells it.
Yeah, yeah. So what are you making there? You're making 100%. You're making 500%, but you're not investing hundreds of dollars. You're investing 10, 20, 50, 100 the most. But if you could repeatedly do that, you're building your portfolio.
Of course.
You know,
Of course.
you're
Yeah, any
if you
money's money.
money's money, money's money.
That's,
But
we're in
what
the
I'm saying is
we're in the
that
game of making money. That's it. That's all. However
if
it
you
comes.
lose if you lose $50, it's not the end of the world. If you lose a
Exactly.
thousand, if you lose $1,000, like that shit hurts. So I noticed that that's what he likes to play. He likes to play cheap little contracts that like I said, are cents, but they can
Right.
become worth dollars. Doesn't seem like a lot of money to me and you, but he's proven to me that that's the way he builds his portfolio, and that's the way he grows his account. But then
Works.
not only that, though, these options, you're also trading with a multiplier. So when you have 100 options of a certain stock and they hit like that, you make a lot more money than if you would have just had one or two expensive ass contracts.
Of
So now
course.
now you're making 100% or 200% times 100.
on normal
That's
companies too, not
right,
volatile companies like Tesla. Like, that Tesla thing was like a one-off thing, but it does happen with Tesla.
right,
Tesla. That's what Tesla's for.
right.
Tesla's that volatility.
I got ballsy, but usually I stay away from Tesla. I stay away from Amazon. I love
Amazon,
them, but that's a good way to lose that's a good way to lose all your money.
right?
So what I had a lot of success with was with Snapchat.
Oh
Trading
yeah,
a fucking when trading at Snapchat when it was at $12, $14, and now Snapchat's at 21. Like
damn,
those are trading Twitter, trading Bank of America. These are stocks within my means that I
right.
can afford to buy 50, 100 shares of. And if they hit, I'm making $1,000, $2,000 off of $100, $200. That's where I found my comfort zone. But
So
like
you
I
buy
said,
the
I
shares beforehand?
not the shares, the contracts,
Okay. Sorry.
the
So you buy.
contracts. But the same thing, like if you the share price is also a reflection of the contract price, because if you look at like I said, look at Tesla fucking options. I was going $300 away from what Tesla was trading, and I'm still paying $700 for that one contract. So that's hard to do. If you want to buy
That's
if you want to buy a
the
few of
implied
those.
volatility for Tesla. That's the whole point. At that
Right.
moment, that price shot down 200 points. You know what I mean? Like, the implied volatility must have gone up by God knows how much. The price goes up by God knows how much. And the big issue is, when you sell it, does a person buy it at that price? You know what I mean?
Oh
When you
yeah.
have
Oh
something
yeah.
for
When
things
they're
like
when
Tesla,
they're
people are buying it.
always, always. So you can, depending on what trading platform you have. I use E-Trade, but on E-Trade you can see how many contracts are being sold, how many contracts are being bought. So if what you're buying is, if there's a market for it or not. Because yeah, you're right. You could buy a contract that absolutely nobody wants.
Yeah.
That's happened to me before too. So it depends on where you're trading. Robinhood, I don't think shows you that.
It
But like I
shows
said,
you a
I know.
little number, but it's like you're saying, you use E-Trade, and it makes sense that a lot of people would be using E-Trade, and you can program on E-Trade. So machines are buying up those contracts because they're making money off that high price anyway. And you're just trying to get in there, and machines are doing it. On Robinhood, it's not the same thing. Robinhood is probably people more than machines, and you're actually selling in a little market, much smaller market. So you can see
Right.
how many people are buying and selling, and that's what I go by. If I see somebody is actually buying at this price and I want to get rid of the option, I sell it at the price. If it's a profit for me, I sell it at the price that somebody's buying it at, and that's it. Sold, no issue. Maybe you get it
There
a
you
little
go.
bit ahead, or maybe you get it a little bit lower, but it's easy. In that sense, it's easy. In E-Trade, that's great to hear that in the bigger markets, there's going to be always people buying it. So you could no matter what, you could sucker somebody into getting this big ass contract. Because fuck.
Yeah. Yeah, but a lot of this is just trade. Pretty much, a lot of this is trading on emotions. Like I said, it doesn't necessarily have to be that what you have is even going to come true. It just has to look like it for a second, and when people start piling on to the put train, or they start piling onto the call train, that makes them go up in value, and that's where you got to strike. Um, Let me tell you, I'm not right now. I'm currently not really trading anything, just because pretty much I'm uncertain of what the hell's going to happen. With the whole COVID shit going on and
Oh, I thought it
elections
was going to
coming
happen
up.
today. I was betting. I have a bet on it happening right now. Today,
I
okay?
mean, this is why right now. I'll tell you why right now I'm staying away from it, because as an economy, the whole economy, it's just my personal belief that we're in the shit right now.
Right.
The stock market is pretty much being moved right now by only five major companies, which is Amazon, Tesla, Apple, Microsoft, Facebook, Netflix. Like, these are the companies moving the stock market right now. Apple just hit like 2 trillion in valuation, and pretty much like 6% of the S&P is Apple. That is the big on rec. That is like a record. That is the biggest That is the biggest percentage of the S&P that one company holds since I think IBM back in the days. So it's pretty scary because if you can't get in on those big companies, then it's pretty much telling me that everything else right now is lacking. Everything else right now is suffering. So I don't feel comfortable yet jumping into trading right now because I don't know what the hell's going to happen. I don't know if this is a bubble and it's going to pop again and it's going to go back down. I don't know what's going to happen if Biden becomes president. It's a lot going on right now. And believe it or not, sometimes being on the sideline and watching, you learn a lot than by playing and losing your money. Because remember, like I said, you got to keep money in the budget so you can live to play again. So far, I'm happy with what I've made this year. I don't mind sitting out a couple months just to see what happens, but it's better than going into something that's uncertain. Another thing that I got big into, and I really recommend it, is learn about learn about what do they call it? There's a name to this. Pretty much learn how to look at a stock's chart and decipher what
Technical analysis.
price. Thank you, technical analysis. What a stock's price point is. Learn about your resistance and your ceilings. Learn about all of that because, bro, them shits will get you. Them shits will get you. And if you learn how to swing trade things like that, I've made really nice money doing that on just one stock. Following it up, following it down,
Right.
and never like when you do this shit, bro. You gotta get all your emotion out of it. Never fall in love with the idea that the stock is gonna go up. Never fall in love with the idea that it's gonna go down. Like, don't marry the call, don't marry the put,
Right.
because it could change. It could go either way, and you just gotta be there to witness it. But if you understand those things, like, oh, the SPY's getting to 330. 330 happens to be, the resistance, and it fucking bounces off at 330 and it goes back down. Well, you already know how low it can go, so you're pretty much trading within that range. You wouldn't be trading at 350 if it keeps bumping 330 and going back down. Why would you get that contract?
Right.
So little things like that can save you, and you won't waste your time or waste your money on a contract that will possibly never come true. But the only time that I would recommend that you could do that, you could be way far out the money, is if you have the time. If you got a month contract, a 2 month, a 3 month, then it's different because you don't even got to be that close to the money to make money.
Right.
But if you're running short on time, that's you got to be somewhere near the range of the stock price. So that's pretty much that. Do you have any questions? Anything else that I can throw in here?
Absolutely not. That was fucking great. Thank you very much. Everything's perfect. I wanted to hear exactly because
just like you invest in the stock market, bro. Invest some fucking money in really decent ass news sources. Like I pay like $30 for Wall Street Journal, $30 for Yahoo Finance. Like I got a few decent news sources. And that's another reason why I use the trading fraternity. I don't really necessarily use it to, copy everything Josh says, but I use it because there's fucking 5,000, 6,000 members on there, and everybody is sourcing news. So there's a chance that you will see something in the chat, or you will hear Josh mention something that you had no idea was going on yet.
Right.
That's where you can make money. When you can call something before it happens. Fucking Moderna just announced vaccine for coronavirus, and then 2 minutes later you see Moderna fucking shooting up 5%, 10%. Those are your moments to strike.
Yeah.
But you got to have a reputable news source to do that. You got to be the first one hearing this, not hearing it 5 minutes late. That can make a world of a difference if you're trading live.
Right.
Usually when I trade, that's how I trade. I pretty much don't. I try not to get into options on the days that I work, because that's where I tend to miss shit. So
Right.
I won't get shit that's expiring the 2-3 days that I work. I like to buy shit the 4 days that I'm off.
Right.
So definitely a reputable news source. Try to follow somebody like that. That shit fucking helps just to hear other people's advice or other people's logic way of thinking. Because like there's shit that I've heard that I'm like, oh, this is gonna be bad for the stock market, but then I hear his take on it, and I'm like, well, that actually makes sense, and he actually thinks this is gonna be good for the stock market. So it's just constantly, going back and forth and brainstorming. That shit really helps too.
Yeah.
Um,
Just listening about it. Somebody who's just like, I love hearing him give commentary on things that are happening, like when Trump talks and all that kind of stuff. I
oh
love
yeah, yeah.
hearing everybody talk about it when it's happening. That's what I wish there was a channel just focused on that. And he says funny things sometimes too. And he says things that make sense when he says it. And I'm like, oh shit. That's very
Yeah, I
cool.
mean he's been doing this shit for a long time, so I do listen to what he has to say. He's for me he's fucking been pretty pretty spot on. Um, don't get me wrong, like I said, there's shit that I followed him into and I just lost my money, and that's not
Such
his
as
fault either.
probability.
It's just the way the game goes. But all in all, for the majority of the time that I've listened to him, I've come up for listening to him. So I would definitely recommend him.
It's fucking gangster. And I recommend everybody to listen to it's just, and he's on all day. You know what I mean? All day. I
Pretty
just
much,
don't get
yeah.
him sometimes. There's just some things I don't get. And when it's dwindling, I like to listen to as much as I can on YouTube and podcasts and stuff like that. So when he's dwindling there, that there are times that he just goes to the bathroom and all you're seeing is fucking nonstop chatting of craziness. Okay, these kids and all that kind of shit. I need to get out of here right now. This is worse. So I listen to him. I really love to listen to him during important events because he does listen to them on the YouTube, and that's fucking
Right. Yeah,
awesome.
he streams them. He streams them live.
That's so cool. Very cool. That's what we need. Real, actual news being delivered at that moment, And if a commentary comes, let it be unbiased. Just like, oh, how do we make money off of this? That's it. Whatever happens,
Right.
how do we make
Exactly.
money? That's it.
Exactly. But yeah, man, definitely. Like I said, those are just a few things that I could think of off the top of my head. Um, if you fucking have any questions and you want to write them down, you want to do this shit again, definitely I'll try to help you out, like whatever I know. But you just gotta put in the time, bro. You gotta put in the time. Um, like I usually work night shifts. So I've learned also to look at, let me see, like what is it, like 11 o'clock at night. I think the European markets.
Of
Sorry,
course, of
3 in the
course.
morning is when the Asian markets,
Right,
and
right,
then
right. Now
11
they're doing.
p.m., 11 a.m. is when the European markets close. Like I learned how to follow those too because the Asian markets, the European markets, usually when you see them having bad days, the stock market for us is going to have a bad day. Usually when you
Right,
see them having good days, not always, not 100% of the time, but usually.
right, right.
So you could pretty much we're the last ones to open. They open before us. So when China and Japan are fucking doing terrible, we're usually looking at a red day.
Right.
So those are just little things that I learned to look at. But like I said, it's just your news source, hearing what's going on in the day, fucking having NBC playing all day, MSNBC playing all day if you're trading and just looking at your computer, and don't fucking rush into shit, bro. That's it. Like it's not, if you see a stock hitting a certain price, bro, and you're getting all excited, just remember it's probably not the last time that's gonna happen. It's probably gonna do it again.
Of course. May I
Yeah.
ask you how it is that you pick the stuff that you trade?
Well, bro, the only companies that I pretty much like married, which is fucking Disney, Snapchat. I just those are just what's on my portfolio. Those are just the companies that I've learned to watch. Um,
You have a
I've
long
just,
term?
huh?
You have a long-term portfolio set up?
I do, and
So
uh, I usually
you do
have the
have some
same
skin in the
companies,
game.
huh?
You do have some skin in the game. You
Yeah,
are
yeah.
you are currently trading,
I when I say trading, I mean like option trading.
investing.
I
You're
don't
currently
trade.
investing.
I don't trade my stocks. My stocks, I buy them and I don't sell them. That's my retirement plan for when I'm 50. So it's up to you of how you want to split up your long term and your short term. My short term is my
Right.
options. My long term is actually holding stock. So I got probably like 100 Snapchat shares that I own. So I would never touch those. And then what you want, usually the way to invest in your long term is, like I said, every paycheck that I get, I'll put in 200, 300 into my E-Trade account. And I do that every paycheck. Every month, I try to buy stock.
Right.
I save some money for my options. I always put money aside to trade options. But every month, I try to buy stock, because what happens is that, you'll buy Apple this month at 300. You'll buy Apple next month at 320. The following month, you'll buy it at 290. So that's my long term. I'm not 100%, too focused on what price I'm buying it. I just want to acquire it, because over the long term, over a year, if when you average out what you paid for each stock each month, it usually balances out to something really good. That's the way I read up on, an investor that told me to do it. Never just buy everything in one shot. Just, you buy every month. That way you could buy low, sometimes you'll buy high, but it pretty much averages it out. But yeah, it's very important. It's very important to always keep, some little money in your stocks and some money for your options. The money that you buy, that you hold in stocks, that's not, it's not, I don't want to say it's 100% foolproof, but there's a good chance that stock is never, like I said, going to go to zero. You're never really going to lose that money. Like now, it might be trading lower than what you bought it at, but in 4 or 5 years, what's that stock going to be trading at? You're probably going to be sitting pretty nice. So yeah, definitely always buy some stock, and apart from trading options.
So going back to options, do you by any chance do strategies like like covered puts or covered calls, stuff like that, with the 100 shares that you have, or
The only company that I own 100 shares in is Snapchat.
you haven't done anything on that?
I don't do it. I don't really do it. It doesn't. To me, it's not.
So
I mean,
with the
it's not that
amount of
exciting.
Snapchat, it's
No,
volatile.
because I mean, the way you could do it, I guess, if I really wanted to get into it, I could try selling these naked calls or naked puts, with my 100 shares backing it up, and then if I make that money and I reinvest it into Snapchat, I could get a few free shares, sure. But like I said, just because Snapchat is trades so low, it's like $20. It's not really exciting. It's not like I make more money selling. I mean, I make more money just buying regular calls and puts than if I were to do that. Because when you do something like that, let's say I sell a certain contract, let's say I sell a put, whatever, I get that $20 credit. If that put expires worthless, I keep that $20 credit. But what's $20? It's not really.
$20. I know you can only do one
It's not
contract. I get this
right.
since you only
Exactly.
have
I can only do one contract,
right,
so
right.
I'm better off investing that money, something else that's going to make me, 100 to 100%,
Sure.
than risking having to sell my 100 shares of Snapchat. Because if that's what happens, that's how you back it up. You got to sell your
Right.
100 shares.
Yeah, I
So
mean,
I'd
if
rather
they
not
want it,
risk
you
it.
take it.
Trust me, bro. I'm fucking woken up because my one of my contracts has gotten assigned. And I woke up to fucking 100 Walmart shares in my account, and I fucking freaked out. That was like $30,000, and I'm like, I
Oh
never wanted
my!
to do that.
And you did not. It got assigned. That's what it got. You were
I
selling.
got
It got
assigned.
assigned. Oh
I got
my
assigned.
God!
I was selling a call. And it got assigned, and I was forced to buy 100 Walmart shares.
Oh my God!
Luckily, I had the money. And then I just sold them the next day. Like nothing happened.
Right,
I got my money back,
right.
but I fucking turned pale. I turned pale white when that happened, dude.
Jeez, on Walmart.
So
Walmart's not that
that's what.
bad.
But I am being, in all seriousness. Like I have seen like these, the stories of kids that fucking trade on Robinhood. Their fucking account goes negative $700,000. They fucking commit suicide. Like that's
Yeah,
why I
the
said,
same.
bro, be careful. Be careful with the credit spreads and the debit spreads. Like if you don't truly understand what you're doing, you can wind up in a fucking position like that. Like it happened to me one time with Amazon, bro. I fucking went negative 10,000 because I did the wrong fucking spread. I thought I did it right. the earnings call didn't go my way. I fucking lost my ass on that. So
Right.
just be very careful. Be very careful with that because right now it might seem cheap and you're like, oh, it's only $20, but it could fucking go against you if you don't really understand it. If you don't 100% understand what you're doing.
Yeah, shit. I did a credit spread on SPY right now, 330, 331. So I'm selling the 330 and I'm buying the 331. You know where that bitch is at
What
right now?
was that?
333.
333.
And I have a friend that's in the chat that did it with me. The problem is, let's say, okay, whatever, one, if I did that one time, even twice, whatever, no big deal. It's $3 off or $2 off. But I did it 4 times by accident. I hit it
Wow.
4 times. So it is a negative $1,000-something. And
Yeah.
luckily
See.
I have the cover of 330 and the 330 is at $900-something. So I am still losing $100-something, and it was supposed to be like $68 that I get off that credit spread. So it's a huge risk. It ended up being a risk, but the risk was covered, thankfully. If this shit would have shot up right now to 350, I would have, lost everything I owned. My
Yeah.
entire
Yeah.
rate.
So that's what I'm trying to get at. You gotta. You gotta be careful with shit like that. So that's why I got big into that for a certain time, and then I just went back to simple calls and puts, bro. Simple calls and puts. They make just as much money as your spreads. Just don't get into the scary thing with the spreads is that like I said, you could get into something that you cannot afford.
Right.
Whereas with the buying calls and buying puts, there's no way that I can get into something that I can't afford. Either I have the money to buy it or I don't. And then, like I said,
Unlimited
once you
reward and defined risk automatically.
exactly, my risk is what I bought in with. And like I said, you go in there with the understanding that you could lose all that money. If you're okay with it, do it. If you can't handle that, probably shouldn't be playing, or you probably shouldn't be buying a contract that's worth that amount.
Right. Yeah, you got to buy within your range. Even now, even if I cannot afford everything you mentioned, is not the game that I'm at. That's why I'm doing the credit spreads, because I watched Josh get to from 100 up. So I know that he did it with credit spreads, and I've been very successful. Just like I'm losing on that one, I'm actually gaining on a Space and a Walmart one, because I watch Space, and I have been watching Walmart recently. But I like Space, so Space is unfortunately falling. I might as well make some money off of that, even if it's a little bit. You know what I mean?
Reading, I mean, like I said, I'm not 100% savvy on them, but I have done my research and just know that sometimes it's not the right strategy to do a credit spread.
For
You just
sure,
gotta
for
know.
sure.
You
It
just gotta
depends
know
on the
when to
timing.
use it, because that happened to me too, and I think that's probably why I stay away from it. That I got so into it that all I was doing is credit spreads, debit spreads, credit spreads, debit
Right,
spreads. It's not always the right strategy. You just
right,
gotta
right.
understand when to use it. That's all.
Of course,
If
of
you
course.
understand when is the right time, it'll be in your benefit.
There's
When
a
the
guy
stocks are
called.
trading at
No, tell me. Tell me.
no, just something like that. That when the stock is trading at, when the options are trading at a ridiculous price that you can't afford, but you still want to come in, then a credit spread might be your friend. But
Right.
if you can have that unlimited, profit, I might smoke your spread with my simple call.
Right.
Just because you're capped at what you can make, and mine is gonna have, just it pays to fucking really understand that, to really understand
Of
when
course.
to use it,
No, and to
not
be
just
quick,
always
very
use it.
quick, because I could have I bought that on Tuesday. If I would have bought it on Monday, I probably could have sold it on Tuesday and made on the calls.
Yeah,
I would have bought back what I had, those two. I would have bit the bullet on it, but like $10, $20. Now it's $400. It's a little too much, and I cannot even afford the buyback. I have to let it go to expiration, no matter what. I'm fucked.
yeah.
Yeah,
It's
it's
a hard
insane.
line, bro.
I love it. I've fallen in love with it because of the secure. I was able to put my account out, and there's this guy called Options Alpha on YouTube, and he teaches you, and he has his own website where he hooks it up, but you have to pay the subscription fee. He hooks it up, and he
Right.
tells you based on the volatility what strategy you should play, and he tells you right
There you
there
go.
what to play.
Yeah,
And I'm like, you got to pay for that. You have to pay for those things. I would rather
but
learn
it's
it on.
worth it. You it could
He
if you
teaches you
have the
everything. He
if you
teaches you
have the
a
time,
whole.
if you have
Yeah.
the time, then yeah, learn it on your own. But like I was saying, like me, when I'm working my hours and I can't really be on top of it and I can't be trading, sometimes it is helpful to have a subscription. Sometimes it is nice to have like fucking Josh's scream alerts that he sends you a text and he tells you what play is going on. Because just because I don't, I wish I could do this shit full time. I wish I could be there Monday through Friday like him, constantly just, and I did it for a little bit. I did do it for a little bit. Just, Monday through Friday, sitting on the computer, watching other charts. But at the end of the day, you need some fucking source of income if you want to fucking keep growing and keep playing. There's no way that I couldn't figure out a way to fucking make money doing it and never put money into my account. Like it doesn't work out like that.
No, and it's an investment in its own, man. We're here trying to make more money and find the right investment. So that's the whole point.
Right. But ultimately, bro, I do know because you had asked me like, how do I pick the companies that I usually trade. Like I said, I fucking one of my biggest plays was 20 Disney calls when Disney Plus was coming out. That was a $30,000 play. I mean, like, look, bro, I got fucking Disney tattoos all over my arm. So what I'm pretty much trying to say is that people tend to do better when they trade companies that they have some sort of fucking personal relationship with, something that they're passionate about. So if I'm a fucking a green energy freak and I'm into Tesla, then probably companies like Tesla are going to be right for me, because I'm always going to be staying on top of that news. I'm always going to be knowing what they're coming out with. You're just motivated, you're passionate. So when you ask me, what companies how I pick the companies that I pick, those are just what I'm into, bro. I'm fucking into Apple. I have every fucking Apple product. I always have since the beginning. I'm fucking big into Disney. I'm a big believer of Snapchat. These are just the companies that I stay on top of because, it is. That's just me. That's what I'm into. But you could have your own interest in your own passion, and you're probably better off literally to that.
Very awesome. Sorry, I just had a lag and I caught everything right now.
Yeah.
That's gangster. That's very gangster. I completely agree with that. If you love it, it's a lot easier, definitely, and you watch it the whole time.
Yeah.
That's why I've been doing the space thing. I love the idea of space exploration. So I will always stay playing that.
That's the best advice that I could give, bro.
And you're watching it, the whole time. I really appreciate every single thing, every word you have fucking said. Thank you very much. There is I hope a lot of people who are going to watch this and learn from the way that you've explained it, because I feel you've made it really easy to explain, much easier than I do. You get it at a more foundational level. That's very awesome. And you really helped me, coalesce ideas. So it's perfect.
Yeah, like I said, man, it could be very simple, or it could become very complicated. It just depends on how much you want to do, how much you want to try to do. But there's no reason why most people can't make money doing this. You just gotta practice, bro. You just gotta practice, paper trade, know what you're getting into before you do it. And like I said, just little tips that I learned along the way. But by no means do I want to fool anybody and make it seem like, oh, this shit's easy. You're gonna fucking make money from your phone. Like there's a good chance you're gonna lose money too. But if you keep trying, you will get lucky, bro. I'm a fucking business owner. I fucking work full time. I have never made, those amount of profits doing anything. I've never made 1,000% profit on anything in my life, but trading options. So that's where it's at.
Gangster. Okay, that's gay. It's true. There's no other return on investment so far.
Never.
That's up until this point, that's a whole other level of access, and this gives us access to something that a lot of people do have, and makes it a way bigger market. More money is trading than we can ever have in our hands. So that means we can get a piece of it. There's no trouble there,
bro. We just gotta put your little hand in the cookie jar. That's all.
Yeah, that's it. And sometimes we get bit. Shit. Today I'm like, oh man, it's a bad day. But it just gives me more reinforcement to try, to keep going.
Yeah, definitely, bro. All right, hey Juan, I gotta get back to work, man. But this was cool, dude. We could, like I said, we could always do this some other time.
Whenever you want, and if you want, I'll send you an invitation. You can take it and see what you get into. It's our chat that we have there with everybody constantly talking about it.
All right, brother. Thank you.
Enjoy. Have a great day.
¿Cómo estás, Jaime?